Time for another AMC daily update. Starting with the 1 minute chart, you can see that today was a pretty big day of huge slide downwards, and as the morning progressed, this line just continued to move lower and lower. With every new low, we continue to move the downtrend, and that's just the way it felt all morning, just continuing to move that down until finally we reach the bottom. And you can see how the price closes range with the trend line right before the reversal there, and we enter the corrective phase at that point. I'm gonna go ahead and zoom in. We can take a look at what the open looked like. There was a pretty big run up initially right here on, it was kind of mediocre volume from what we've seen lately and a little sporadic. And the RSI did make a quick turn at 70 and turned down. And for me, the biggest signal was the rejection of the 2360 level. You can see a V-type top form up here with a small little handle and then breakdown. And I don't like to look at these small 1 minute chart patterns, but they've been pretty reliable in the stock, probably due to the incredible volume just in general. But you can see that there even seems to be a bigger V-type top in here with another handle. I want to talk about those V tops in a minute. I want to run through the daily price action first. So right here at this candle, I said, hey, you know what? This looks like a rejection of this horizontal level of support and resistance. I bet we go a lot lower. And so I entered this April 14th $22 put, and I wrote that down. And then I saw something that made me really excited right in here. Okay, I'm gonna zoom in. We are really close now. Okay, what happened from here to here? Okay, I'm gonna go ahead and blow up the implied volatility too, so you can get an idea. And this was just a couple of candlesticks that showed this. But here you can see that the implied volatility rose. Okay, you can see that we had a very nominal rise from 144. Well, it's kind of just within the 144 percentage there, but there was a rise over these 3 or 4 minutes while the price dropped. And that would be a negative correlation with the price. And that is the cue I've been looking for in order to really identify when the uptrend has ended and the new downtrend has started. So that was really cool to see, and I'm keeping a really close eye out for that. As you can see, I'm even just looking at 4 or 5 minutes at a time if I need to. When the price did make that divergence, we did see a new corrective phase begin here. And at this candle right here, this is where I said, hey, I'm gonna go ahead and take profits on my puts, which was good. I actually made really good money here. As you can see, I opened that position at 73 cents premium, and then I closed it at 115. So I didn't calculate what the percentage gain was, but 27 plus 15 is like 42 or something like that. So at a 73, I mean, that's a great day. So I was happy with that, and I held on to those gains, and I just sat the rest of the day out. And sure enough, we did see another peak here, and then boom, a fall downward. And there's a fractal in here that continues to repeat itself. Obi-Wan and I have been looking at this. There's like a 1, 2, and then a 3 peak that's higher than the other 2, and then boom, a drop down. And it's kind of just like a modified measured move down. You can kind of see 1 peak, 2 peak, a third higher peak, and then boom, that corrective wave breaks. And the price falls down further. And then you have a couple of more little funny rises before we found this basing pattern in here. At the end of the day, I think though, what we saw was a pretty clear bearish signal that the price did not find support near the 50% retracement of the recent run up. And I do want to point out too that there was a larger instance of rising implied volatility, and you can see that. It even started back at that 3 or 4 minutes I was initially identifying. But this IV trend was going up. It was increasing. It wasn't a lot of increase, from 143 to 146%, 3% increase is pretty good. And as you can see, the price during that time was actually falling. And this is a big deal. This is a very big deal. This means that the price could be setting up for a bigger dive down. And this is how I identified the downtrend that started in January. I mean, retroactively, of course, but nonetheless. So there was another instance here where we had a fall in the price and a rise in implied volatility. You can see the IV made an intraday jump higher on very little price action, coming to the end of that downtrend. This is a big deal. I think the IV has made that critical flip I've been looking for. Really critical flip in its correlation with the price. So getting really excited because I think the price might be getting ready to finish and complete the third measured move down. If you've been watching my videos or you haven't been watching my videos, go back and look at that because I'm not going to pull it up today. It's just a lot of information. And the price did seemingly find some support at 21.02. I think this should have been 21.09. It should have been the real level there. You can see that would have been much closer. I think 21.10 was where it actually bounced, and we're going to see that 21.09 level appear later. Nonetheless, this was a pretty good level. As you can see at the end of the day, finding support off of it and launching forward, and ooh, corrective uptrend is in range. Tomorrow's open could be very important. Now, I really want to stress how this big fat green candle sent the implied volatility down. Moving on from there, I want to start showing a new fractal I think I found. I've been looking for these fractal patterns, and I believe I have something new. And it's the V-top fractal. So let's see here. I have, if you can see I'm looking through these menus of my drawings. There's so many. Let's see here. V-top, V-top, first V-top. Okay. So the first V-top would be at the very, 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 very peak right here. And it's really sloppy. It's a 1 minute chart, okay? So the pattern's gonna be less precise than those that follow, but essentially it follows the criteria pretty well. I have Bulkowski's webpage here, thepatternsight.com, pulled up, and you can see that he has some trading tips and some identification guidelines, bull market results, whatever. You can go through here and see how these are identified, all right? There needs to be a rise, a run from B to A, and then a retracement, okay, down to 38.2%. Now that's our arbitrary value, and I can't stress this enough. Fibonacci levels are methods of measure, not levels of support and resistance. And Bulkowski did a whole thing on that in this book. He provides a study of it, and he says, hey, those levels aren't really that significant. They can be, and I think that when people in masses or algos, whatever it is, are trading on that basis, it can give that method of measure more validity, right? So it's kind of like how everyone speeds on the freeway 5 over, right? Anyway, so we have a lot of good information here from Bulkowski, and you can see he even identifies a volume spike at the very peak, and you can see that the price after reaching that high just falls right back to where it started, and you have this mountain looking effect, okay? There is always a possibility to have an extension of this, and that would be a handle, kind of like a double bottom. You might have a handle, a period of consolidation before you see the breakout, and that's because typically you're going to see the start and end of those kinds of patterns at a heavy level of support and resistance, which is the case here as well. So that's what a V-type top is. Let's see here. I recently pulled this up, and I just took a look at it and said, hey, wow, that's got to be what we're looking at. And so this is really sloppy. You can see that there was a run up here, a small level of congestion halfway up that run, and then that rejection, okay? And that handle, that extension, that forms right about at that 38.2 retracement level. And this is on the 1 minute, so this is very small. And after that breakout, you can see that the price reached right back down to where it started. So this would be our first one on the 1 minute chart, and this was on the 29th of March. I'm gonna go ahead and zoom out to the 15-minute chart and find my second V-top drawing. Zoom out. This one's a lot cleaner. This was the first one I actually saw. And as you can see, it resembles what I just showed you, except it's on a 15-minute chart, so it's bigger, it's longer, but it's essentially the same. We have the starting point of a big run up, a level of congestion right up the midpoint of the run, then a peak, excuse me, and then a drop, and we have this extension which is forming into this handle. And I'm not really sure what this handle looks like, where the breakout was. I had it charted like this yesterday, and now I'm tempted to pull it up so it makes more of a pennant, or a flag, I'm sorry, rather than a pennant, but it doesn't really matter. I think what we've seen is a false breakout, overhead resistance, and now we're going to see the downward breakout and completion of the pattern soon, and that would be a drop down to 1987. So this would be our second B top. Very fractally, you can see that this handle begins right about at 38.2%, reaching just above it, just like the first one did. So that's cool, but there's actually a third one too. Let's go ahead and turn on the 4-hour chart, and I'm gonna pull up my drawing again. Let's see here, third V top. So this is the least complete V-top, okay? And you can see there was a level of horizontal congestion at the midpoint of that run, right at the 38.2, just like the first two V-tops that I showed. And what we have now is this run down, okay? And 38.2 represents the confirmation of that pattern, and it is arbitrary, right? So if tomorrow's red, like at all, and closes red at all, that pretty much confirms this V top as well. And that would imply a drop all the way back down to 1290. And that's the technical analysis that Bulkowski charting provides us. You can see that the RSI here is falling and IV is starting to turn down, I mean, coming very low, and volume has just fallen off. This looks pretty much like a good setup, doesn't it? I would expect at this point probably to see a drop down into that $19 price target from that previous V-top, and then some more consolidation, and whatever that looks like, I don't know, but it's going to be handled. If it looks like the first two, it's going to have a downtrend at the top trend line and maybe a supporting level below, but that would be our level of consolidation before plummeting back down to 1290. So the V-top fractal is a go. That's what I found today. Something else I want to show really quick before I wrap up the video is the implied volatility on the daily chart. I'm going to pull up my, let's see here, default drawings. We can zoom in here a little bit. Yeah, that's rejection. That's rejection. And the reason why this downtrend is so strong is because, well, that was a big run, and it was a major descending level of the downtrend that shot this thing down. Nonetheless, so what we have in the RSI really quick, you can see that's across over into neutral territory from bullish, so a bearish move back down, a regaining of momentum from the initial downtrend. Volume is very low, and this is what drives me nuts. Look at the implied volatility. Ooh, it almost rose. It fell sharply, and then the decline today was absolutely nominal, within a 1% over the day. I would think that if we have another tall red day like this, that we're gonna see that implied volatility tick up on the daily, on the downtrend, and that for me is gonna be a huge bearish confirmation. So basically what I'm saying is, if the price doesn't stop falling today or tomorrow, that this could be a completion and a drop down to 1290, and it could feature another vertical run down. And when I say vertical run down, I mean, this was technically a vertical run down. It's a little not very well shaped. That's not quite, it's only 3 candles. But back here, this initial jump, this was a vertical run down. I'm thinking something like this could reappear. It's very possible. This is an important level of support and resistance that the price is currently at. You can see this is where the price took off from to run up to 34. And if it is lost quickly, I expect the price will just drop like a rock. But it is possible here to consolidate too, right? Remember, we're at the 38.2 retracement of one of those V-tops. So maybe sideways for the rest of the week. I don't know. But all indication points to me that this is still a bearish chart and there's more downside coming.